We're live. No countdown, huh? No, just no countdown. Okay. All right, Jodie. It works out because we haven't gone live for a while.
Yep.
Welcome back.
Thank you.
And I am thinking about selling my townhome. And you have some things to say about that. So, first of all, before I get into that and I get into why I might sell my investment and why Jodie has a lot to say about that, I want to encourage everyone, go to coreteamhawaii.com here. You just type in coreteamhawaii.com. You could also Google us and we'll pop up real quick. In fact, let's do that together. Google Core Team Hawaii. Watch what happens. You see our business, 42 5-star reviews. Not so humble flex. Click website or just click us right here. We don't run any ads or anything, but we should, because I know some people get business that way. And with our brand strength, we could. But we mostly rely on our network and then you guys. So go to coreteamhawaii.com, go to the bottom here, fill out this contact form. And another thing that we mentioned in past things, and we need to put like a little sticker here. You can click on these. So these are majority, all but one, are videos that aren't viewable anywhere else. So if you want to hear about Ewa Beach or Kahala.
Yeah,
so
that's so cool.
Yeah.
I love that.
So some people have like exhausted all of our content. Oh, that's the cheesiest one. It's Kahala, so I like put on my old suit and thing. Let's click on Aiea. That's better. Should be Mahi and I discussing Aiea. Yeah, so we're in a podcast style discussing Aiea. So there's that on the website, and you can go there to contact us to sell and buy real estate, or if you have other real estate questions in Hawaii. All right, so I've been thinking about selling my townhome because we have months where we don't cash flow, and then we have months where we do. Last year on tax return, of course we expense a few things through the business, whatever, but we were negative $7,000 in cash flow.
Okay.
I mean,
not that bad.
No, because it's gone up. I've owned it less than 2 years, and we bought it for about $1 million. And there's listings right now that went into escrow 1.3.
Okay.
Well, they're listed for 1.3. I don't know what they're in escrow for. There's one that sold for 1.2. So let's say those are even at 1.2. That's 20% in 2 years. I mean, it's great.
Amazing.
But yeah, I don't know what I'm gonna do. So we also don't like managing the Airbnb.
Yeah.
People are like, oh, the blow dryer doesn't blow the right heat, or we prefer a mop over a Swiffer for like these like 10 tiles that we have to like, or just small things that I guess aren't that abnormal for Airbnb world. But I've learned that I have this busy business, a family, a life, and I don't like we don't like managing it.
Yeah.
So for all those reasons, we're really close to listing it. And then we got the email on Thursday or Friday of last week. And I say it here because I have to disclose it. That's how real estate goes. If you're aware of something, it's a material fact, you disclose. So whoever buys it will have to tell them that the future cost of insurance is unknown.
Right.
That's the synopsis of what the email said, is like, we're up to renew our policy and it's unknown what it'll cost, but it's going to cost more. And what are you seeing there? Is every condo and townhome and anything with an association across this state going to have these assessments and these maintenance fee increases because of insurance?
Yes. No, not every.
Not every.
But in general, you could almost answer that nationwide as a yes.
It's not a Hawaii specific issue.
Correct.
Okay.
So we do have a population of property that is older.
Okay.
And high density, of course, in Honolulu of high rises.
Okay.
And so based on a lot of them and yet at the same time, it's a small number, right? Then if you compare the number of condos in California as a state.
Yeah, when people move here from the mainland, they're like, they're geared up for like, oh, we can afford this per month, and so we'll buy this. And we're like, in that zip code, pretty much every single thing below this price, you have to add on $900, depending on the community, right?
Right.
Per month for association fee.
Right.
And that's news to someone coming from St. Louis.
Right.
Or whatever. They're
Right.
like a maintenance fee. Like I've heard of those. What is that?
Yeah.
Here we're like probably more people have them than don't
Right.
in this state, right?
Yes.
Yeah. So
Yeah.
yeah.
And a lot of those, high rises have, due to the nature of our size, we're small but mighty. Like we're paradise. We're, $1 million shacks, right?
Okay.
But we're still small per unit, right? So meaning there was just a less number of insurance companies at play. And so what happens is when someone takes hold and kind of starts gaining momentum, like, okay, well, I already have this condo and that condo and that condo.
Okay, so we're talking about when these salespeople who broker the deals and then their wholesale line of insurance is ABC Insurance. And they're like, well, I got building A and you're sharing a lot with B. No, now I got building B. So building C, you should go with me. D, you should go with me. And all of a sudden, 50% of the city is insured by the same carrier.
Yeah.
Because you have a really strong salesperson.
Right.
Well connected.
Right. Knowledgeable
All
at
the
the
stuff.
time.
Yeah.
All that stuff. So it's this perfect storm of age of the condos, insurance carriers involved, a lot of boards followed suit with listening to their insurance, maybe 50% paying attention and 50% saying, well, that's what the agent's telling us to do. So, of course, we're going to do it. Like, take a vote. Like, who votes yes, yes.
Unless you had seen this before and your HOA president happened to be a 50-year insurance person who could foresee this, like, highly
Never.
unlikely that someone would be like, let's go with the more expensive insurance.
Never.
That isn't the one that everyone's using.
Never.
Yeah.
Nobody.
Yeah.
And a lot of people lost business because, they got a phone call from XYZ insurance company saying, like, I could probably save you guys money, which is only going to help keep your HOA dues low,
Yeah.
which is only going to help keep the property marketable.
You'd be irresponsible not to pivot.
And if you took a vote of homeowners, like, honestly, when you get your little proxy in the mail, now that you own in an association,
Yeah.
what do you check? Like, do you go to the meetings? Do you check, I'll vote with what the president wants?
I ain't trying to be near any association.
Right.
For the most part, I don't participate.
And I think that's like 90% of the population.
Yeah.
So you just had these boards that had, like, who are on these boards at the end of the day? Like, who are you? And making big time decisions, which hindsight being 2020.
Yeah, I don't fault them, but so what it is that there's one dominant insurance carrier. Well, there's one dominant insurance broker, sales team company, insurance broker that insured a large percentage of the HOAs.
Yep.
For insurance, for hurricane insurance, total replacement insurance. You'll teach us about Ordinance ABC, all these different insurances that are required and or recommended. There's one dominant broker who then predominantly brokered it to one insurance carrier. Is that the proper term? Provider. And so after Miami and Lahaina, they look at it, and if you're not familiar with Miami, this building basically collapsed in Miami, this condo building, and people died, and it was really tragic. And everyone watching this probably knows about the Lahaina fires. By the way, if you're watching, put your questions in the comment section. We will get to them, and we love having them. But so then they look at it and they go, we have too much exposure.
Right.
So the things that are happening are either one, they're getting out and say, we're not going to insure you, or we will cap what we insure you for. So that cap could be some arbitrary number that is arbitrary to the homeowners, or it could be the previous total amount.
Right.
Like they're not going to increase to the new amount needed at renewal. So in any case, for a lot of these buildings, they need to either change insurance providers entirely. Now, they may not change their broker, that salesperson that brokers the deal, shops to all the different insurance
Right.
carriers. They might stick with them because they don't fault them.
Right.
And they're familiar with the building and the HOA. Why switch, right? So they may stay with that person, but they either have to get an all new insurance carrier,
Right.
or, for the first 10 million of insurance is with person A, but then the last million or 2 million or 3 million is exponentially more than the first 10 million because they're going into, it's not called like secondary market, or I forget what the insurance people call it, but they go into this tertiary insurance.
I think they
market.
do call it secondary.
Yeah. My brother-in-law or sister-in-laws use some other insurance nerd term. But anyways, they have to go and get extra expensive insurance.
Right. And it's more expensive because just like a riskier loan,
Interest rate goes up, right?
right? It's a riskier policy.
Why is it riskier though? If this is our community, this table, and it has 100 homes, and they're worth 100 million, and someone, because they had a policy from 5 years ago, is insuring the first 90 million,
Yeah.
why is it more risky for me to insure the last 10?
Because nobody wants to insure it.
That's not more risky. It's just they have the leverage. They got us.
That's A,
Yeah.
but also based on the age of the condos,
To be
things are-
second is good though,
right? Yeah.
because the first people have most of the exposure.
Yeah. Yeah.
And the chances of you even being called upon for the last 10 million are lower. It should be cheaper.
Yeah.
So I'm not going to go off on a tangent and a rant about some of the vitriol that has been directed towards the real estate industry. What about the freaking insurance industry? Oh, yeah, like they're in the business of collecting. Oh, not good for us. We're out. And you're up shit's creek with no paddle.
Right.
So I'm a little pissed at the insurance industry. But anyways,
I agree.
digress.
And
I digress.
I agree.
Yeah.
It's like even when we're talking to our trusted insurance agents and they're telling us on some level to make sure that our homeowners, our past clients, are not filing claims.
Really?
It's like that's the purpose. The way that a normal human mind is thinking is the purpose of my insurance is for insurance. When I need it, I'm going to file a claim when I need it, right?
Yeah.
And the insurance agents are trying to eloquently explain to us that filing a claim is going to highlight you. And when insurance companies decide to no longer offer insurance, that you're going to be the first to go. So you're going to get a letter.
This feels like a toxic relationship. It feels like I'm getting cheated on, and then they're telling me, but hey, if you say anything and she leaves you, you're going to be worse. You're going to be worse off. So you should just be aware of it. You know about it, but don't say anything. Just pretend like it's not happening.
Unfortunately, yes. I mean,
It feels like
it's
that.
the reality of the landscape. So we have buyers, homeowners that have filed claims, and they call us, 90 days down the road, and they say they did get the coverage and they were happy with the service and all that stuff. But now they got a letter that says, effective in the next 60 days, we will no longer be insuring you. And so please go find a new insurance carrier.
Yeah.
And it's the nature of the industry, and it's, in my opinion, it's ridiculous because they have collected so much.
For
if anyone did the
decades.
math.
What building had to be totally replaced, and or even other than Iniki grazing Kauai and roofs needing, before Lahaina, they collected billions, I'm sure.
Yeah.
For decades. We
Yeah.
haven't had a major natural disaster ever.
Yeah.
And in anyone who's been alive, like there's even from 1924, like Pearl Harbor was like the last thing where people filed insurance claims.
Yeah.
And then now that you have to pay it, like it's
There was
really
the 40 days
frustrating.
of rain, and there was all these memorandums, of freezing policies, and there was days when, as a lender, like we couldn't close because we couldn't get new insurance policies because of all of the claims that came in from Kailua.
Yeah.
There was that.
Yeah.
I mean, and that's not a full replacement, but this is a little bit off topic because these are single family homes, but these were big claims, big coverage amounts, entire roof repairs,
Yeah.
At the end of the day, we can't force, unless the government gets involved, we can't force an insurance company to provide coverage.
Yeah. That's the thing. The government, like, we can have this lawsuit against my industry, the real estate industry.
Right.
That is really false. Like, you never had to sell your home on the MLS. You never had to pay anyone. Now, Coldwell Banker can say, we don't allow our company to help people for less than 3% or 2%. But that's Coldwell Banker. That's not the industry.
I mean, any conversation I have ever had with any buyer has always been that commissions are negotiable.
It's always negotiable, but
Everybody
in insurance,
knows that.
there's nothing negotiable. Like, you will get your car towed if you're pulled over and don't have car insurance. You can't mortgage a home, which you could talk about, well, back in the settlers' days, you just squatted and built a house. Well, it's not that anymore. Like, you need leverage. You need a loan to buy a house. Can't have that without insurance. Yet, if the insurance company does anything more than collect, they're like, rates are going up, premiums are going up by 100x or 1000x, and or we'll just leave. And that's really frustrating. But anyways, it's not productive to complain.
Yeah.
So
the issues, the problem is there's so many issues.
Yeah.
It's just to summarize as clearly as possible.
Okay.
There's a required hurricane coverage,
Okay.
required per the state, which doesn't include a full coverage amount. Meaning, if the building was to suffer a loss due to hurricane,
Okay.
it wouldn't be replaced 100%. There's only a certain amount of funds that will be given,
Okay.
and that can be used to help rebuild.
Okay.
That's an issue.
Okay.
The other one is just not having enough dwelling coverage. Meaning, if there was just any sort of, not hurricane related, any sort of a loss
Okay.
due to any other reason other than a hurricane,
Okay.
and not having the 100% replacement cost coverage.
Okay.
Okay.
So a fire, you name it, anything, landslide.
Yeah.
Okay.
Negligence,
Negligence.
which was a big part of,
Miami.
yeah.
Yeah.
And then the other issue is there's requirements of like what type of coverages are, what's covered. So like,
Is this the ordinance ABC?
Yeah.
Okay. So if it's not entirely decimated and needs to be rebuilt from the ground up, then
Right.
that policy doesn't work. You need like little partials, right?
Right. You need like endorsements or like
Okay.
add-ons
Okay.
or whatever. So it's like in these scenarios, and I read through a policy book the other day, and it was 27 pages.
Sounds horrible.
It was like so confusing.
Yeah.
I don't know how it was so hard to follow. Like, if this, but not this, but this, then we will cover.
You would have
if-
like a FBI serial
Right.
killer, like strings, like
Right.
if this.
Right.
Yeah.
So the nice, someone explained it to me a really good way, which was if there's damage to a wall,
Okay.
okay? So there's damage to 25% of the wall. In one coverage, which they call coverage, let's just call it coverage B,
Okay.
will cover the damaged portion of the wall,
Okay.
okay? So I will cover, since that damaged portion of the wall is going to cost $50,000, I'm going to cover the $50,000 to fix this damaged portion.
Okay.
Now, even if then another type of insurance, another add-on, let's call it C, is if the cost at the time of assessment was $50,000, but now it's $60,000 because it's been a year since
Gap coverage.
Right?
Or whatever. Yeah.
Okay, so we call it inflation guard,
Okay.
or the cost of construction increasing,
Okay.
which is very real.
Yeah.
So not only are we going to cover the assessed amount, but we're going to cover the real cost.
And these are things that the reason why we're talking about this is because if you're trying to get a loan and underwriting says it looks like they don't have sufficient insurance, you can no longer get the loan. And so that's the foundation of the conversation. Did underwriting and Fannie and did these entities not care about this stuff prior?
Yeah.
Why does everyone care so much now? Because it seems like there is no end to the conversation. Like, you need insurance for if it's a full moon. It's a Sagittarius state.
It's like the age of insurance. I mean, like before it was like the age of appraisals. Before it was the age of, it's like whatever is the thing that I don't really have a good way to answer that other than it has fallen under the microscope.
Okay.
And now it is getting dissected.
So I have an example for the people at home. So I just sold, I facilitated the sale as a listing agent for this condo in town. And had the owner sold 9 months ago or whatnot, she probably would have been ignorant to these increases. But they were one of the buildings that came out probably 6-8 months ago and said, hey, we're going to have these assessments and these fee increases. I read through this document stating why, and it was basically the insurance carrier dropped us. So we have to go into the secondary, tertiary market, whatever. And the increase was drastic. I mean, it was just so drastic. And so when I look at the cost, this seller, I know she wasn't entirely happy. Look how authentic we are. I'm saying one of my sellers wasn't entirely happy, but I think she should have been. I think she should have bought us roses, but the thing is if a place is worth $800,000 and the maintenance fee and HOA combined is $1,000, let's just say. If you have an assessment of $400 currently, so effectively $1,400 per month, and they've stated you're gonna have an assessment of $500 next year, so it'll be $1,500 per month, and we're increasing maintenance fees by 20% this year and 20% the next year. So effectively, it's gonna be like $1,600 next year and then $1,900 the next year, $1,950 or something. So your maintenance fees in 24 months are going to go from $1,000 to $2,000. Let's not even go that far. Let's say right now for every $100,000 that you're borrowing, it's probably around $650 per month. So let's say it's $650 per month at today's interest rates for every $100,000 you're borrowing. If your interest rate goes up, if your maintenance fees go up by $650 like that, well, if you reverse engineer that math, your home is worth $100,000 less.
Yeah.
Now, luckily, it doesn't work exactly like that. It's not a 1-to-1 ratio. For every dollar maintenance fee goes up, dollar and home value suffers. That's not how it works, luckily, for sellers.
Right.
But that is one way to consider it. Yeah. Affordability, although the market doesn't, do that to a property, if you just did a math equation on affordability, that is the case. Like for every $650, your home goes down $100,000 in affordability. And this client, we were able to get it sold for effectively $760. The recent sales that she had hoped to achieve were like $780. But the maintenance fees are going up like $900 in the next 24 months. It's
crazy.
I will take the $20,000 haircut and
Absolutely.
run.
I would be ecstatic.
Run. Like I will run. I mean, $1,000 increase, $20,000, less in sale. That's 20 months. Like I'll take it. And so for people buying right now, it's important to understand who the insurance carriers are. Underwriting, lending is going to be looking at it with scrutiny. And it may mean avoid the buildings that have the insurance thing.
Yeah.
It may mean if you're a VA buyer or, you're using some government loan product where they don't look at that as strictly. It may mean that if you can get like the deal of a lifetime, then attack it because there's going to have to be some equilibrium. And if I can get the deal of a lifetime and I'm the only buyer that they have, maybe I use leverage. So let me go into that a little more. It's still the case that with a VA loan, if the building is on the approved VA list, and that's not Fannie or Freddie, that's Jenny Mae, right? If the building is approved on the VA list, this building, then you can pretty much you can do the loan, right?
Yeah.
regardless of what insurance stuff is going on. So like Sky, Ala Moana, right? You can't sell. You can't do a loan there unless you have a VA loan. It's a government product. So if there's 15 of the same unit on the market hoping to sell, reminiscent of like a 2009 scenario, there's this excess of inventory, not in the market on the island, but in this building. And I'm coming along with a VA loan, and I said, I like it. You're trying to sell for $500, I'll take it for $350. Now that'll probably never happen, but if you could, then yeah, maybe leverage, like go for those buildings with the problems because you have the solution. Mm-hmm. But if you're just a traditional buyer looking at traditional underwriting, we have another buyer, or a potential seller buyer, Joseph. Shout out to Joseph. And we, I think you guys are scheduled to talk to him today.
Yeah, I think so.
Yeah. And so we're looking at his and we're like, if you sold now and you bought something, like when's the timing right? So he owns a townhome and just got this insurance notice as well. And he's like, well, I got time. I'm not in a hurry. My advice to him was this. It was, if you want to make this happen soon, like in the next 24 months, I would say you don't have time. You should be in a hurry because although you still have to disclose, sell as soon as possible.
Yep.
If you're talking like 10 years, then yeah, it probably won't, this all won't matter in 10 years. There will be some bottom point because of insurance and then equilibrium again.
A solution.
When is that going to be? I'm asking you, when is that going to be? Like if you own a condo, what you do, and have you guys gotten this?
Yeah, we were
a long time ago.
We got it like 4 years ago.
Okay. So yeah, because Tia, probably she's on top of stuff. But if you own a condo and this insurance thing is happening, do you hunker down and stay in it, or do you exit and try and get your money somewhere else? How long, like when is rock bottom?
There's no, I would agree with you that there's no one answer.
Yeah.
I would say if you can hold on for 60 months.
5 years.
That you'll be able to see it through.
So military coming right now, only here for 3 years and buying in the 400,000 range. It requires more thought than it previously did.
Absolutely.
Yeah.
100%.
Yeah. James has a question. Where's James? James. I see blink, gotcha. Will direct question to Derek. Single sailor will be at Pearl Harbor soon. Not hugely outdoor person. Fair skin, ginger, who burns. First part of that question? How do people avoid getting scammed? Oh, it's two different people. Oh, Aiea, Pro City, Eva Beach. Where is best? Oh, single sailor. Will be at Pearl Harbor soon. Not hugely outdoor person. Fair skin, ginger, who burns. Looking for more local culture as I just left and loved Japan. Oh. If I'm a single person, and what'd you put? Aiea, Pro City, Eva Beach. Depends. If I want to do go surf every day and live that kind of life, then I'm going Eva Beach. Yep. Not because it's the North Shore or Kailua or town, but you can go to the ocean with 45 minutes left of sunlight. If I want to walk to a gym and to do yoga and to do fitness, I'm going Aiea. Probably going Ko'uka Loop. But I would say don't sleep on downtown Honolulu. Cool places to eat, nightlife, easy commute into Pearl Harbor. Don't sleep on downtown Honolulu.
I agree. I would definitely take Pearl City off the list.
Pro City, yeah, because Pro City doesn't do anything that the other two, it doesn't do anything better.
Yeah.
It doesn't do things to do and a little metro feel like Aiea has, urban metro, the last bits of that. It doesn't do that as well as Aiea. And then if you want to be in nature and go walk on the beach or even go to like Waikai, Surf Lagoon, or just like shop. Like it doesn't do that better than Eva. So it doesn't really do anything super well. Pro City is just a place where people go for like, some people like the school districts. Yeah. James, how do people avoid being scammed when renting rooms or studios monthly? Meet them and feel it out. If it's on the MLS, so if it's on highcentral.com, so if you go to coreteamhawaii.com and go to, here, I'll plug our site again. Kenji can pull it up. If you go to coreteamhawaii.com, go to buy and go to search homes, you can search homes for sale. And this same thing Zillow and all these other places do. We pay a subscription service to re-syndicate the information from this site. Now, this is not user-friendly. It's not that nice to look at, but it's really for us, the agents. This is the MLS. But if it's on here, it shouldn't be a scam because licensed realtors are posting them on there.
Yeah, I was going to say for sure just go through a property manager, even though it's
but they
harder.
don't do leasing though. They don't do like but like I want to lease a place.
No, I mean, but what do you mean?
If a property manager is the one on
That
the
you're
other side that you're
yes.
communicating with, then you should be good.
Yeah.
And that will be on here on highcentral.com. But for people coming from the mainland, a lot of them are like, oh, like be my leasing agent. Because big successful teams, what they'll do in New York or whatever, they'll have a small staff just dedicated to leasing. Like they'll have an employee who's like, this is our leasing menu of services. This is what you would pay. And then the property managers will pay a cooperating fee to top it off. But that's just not a thing here. And unfortunately, we have so many people that watch the channel and come in. If I had Aiden, for example, youngest guy on our team, if I had Aiden help all the renters that needed help, he would work the entire year and make no money.
Yeah.
And unfortunately, although we're not just money first, like it doesn't make business sense. We can't do it. And when we've tried to help people lease, the property managers are like, what are you doing? Like, that's not a thing here. Like, move out of the way. We want to talk to Josh. We want to talk to James. So that's just kind of how that's gone. We have any other question? Traffic from town to Pearl Harbor bad? No, I mean, you're really reverse commuting. And if you were in downtown Honolulu, you would jump on Nimitz probably. And then go past the airport, and you're at Hickam, Pearl Harbor already. Pearl Harbor, Hickam. You're talking to the front gate of Pearl Harbor from downtown Honolulu, even in the morning, probably 15 minutes. Yeah, it's not bad at all. Derek, did you replace your broken... What did he say? Oh, there's the things in the way. Did you replace your broken TV? Saw your Instagram story of the broken TV. Bruh, handle that. Who are you, Hoy?
Who are you?
Yeah,
who are you?
Send me an Instagram message or something. So, my kid broke my TV.
Oh, my God.
Yeah.
Did he throw something at it?
No, we have like a TV stand, and it's not mounted on a wall because it's in front of a window. And the PlayStation was like sitting on the stand, and the PlayStation is taller than the bottom of the TV. And so he bumped into it. And these new TVs, it doesn't take much.
Yeah.
And so he bumped into it, and the thing went pink.
Yeah. My son kicked a soccer ball into it. A soft one.
That's the second one. So the first time, my parents' TV, he broke it with a Wii remote.
Oh, man.
Bowling.
Oh, man.
Yeah. Kimberly Herzog, in an investment standpoint, would you recommend getting a condo to renovate? HOA cutting into costs you can spend for a mortgage, or save a bit longer and buy a renovation home project? Well, the thing about that conversation in Hawaii is it's not that most people don't have the luxury of choosing either, because single family entry point on island is like 800-ish. And in some communities, it might be north of $1 million for a single family to even start to be a thought. And so if someone's not that high, by default, it's condo with an HOA.
Right.
To flip is like, assuming there is no insurance, like shenanigans going on. To flip, I just care which one I buy better. If I can buy a condo for $10 and I can put $100,000 into it, and then sell it for 300. So I have a $200,000 margin. I like that deal. I wouldn't just like buy a single family for 800 that I put 100 grand into and sell for $1 million. So there's only 100,000 in profit and way more exposure.
Yeah.
I wouldn't just do single family for like, it's just whatever I can buy better. But if I'm talking about holding long term,
Right.
I'm more scrutinizing of condos and I like single family. In fact, I might be selling my Ko'olina townhome to get out of it and get into single family.
Yep.
So, and I think on average, single family appreciation is higher because you don't have those maintenance fees you're contending with. But there are instances where like you're buying pre-construction in this building or whatever where, you know, you experience unusual appreciation in the first years, right? So condo plays are different.
And those have upfront opportunity cost.
Yeah, like putting 20% down and not having anything to show for it for like 3 years.
Right.
Yeah. And
it's very rewarding
when you get it.
I mean, if you can.
Have you bought pre-construction condo? No.
But a bunch of my clients have.
I know people that have, yeah.
And they're sitting on. He like was unemployed, but he's very he's a GM. But at the time he was in between GM positions.
General manager.
Of hotels.
Okay.
So he was like, just write me a pre-approval letter. I said, okay. I mean, I just want you to understand the gravity of the risk because you're dropping so much money, liquid.
Yeah.
He was like, in 3 years, I'll have a job.
It's like a 3-year CD or something.
Yeah.
But then with leverage.
Yeah.
So it could,
He
usually works out.
Oh, yeah. So he did get a job, and I did do the loan when they were ready to close, and he, walked into over 200,000.
Question about that. Let's say I want to go buy a condo right now. And so I have to get pre-approved, I have to put a down payment, but it's not ready for 3 years. Now, one thing I know that exists, you're not like locked into it. Like if say there's 2% interest rates today, you don't get to save that from 3 years from now. You have to wait and see what rates are at the time. So that's a vulnerable thing too.
Right.
Because if you're flirting with being approved and say rates are fairly good, like 4%, if they're 6% in 3 years, you may not be able to be approved and your money's locked into that. So that's one thing. Mm-hmm. But let me ask you, if I put, $200,000 down on $1 million condo right now, and it's not going to be finished for 3 years, does that affect my mortgageability for those 3 years?
No.
So I could go get something else. Mm-hmm. But I got to make sure that doesn't screw my debt to income up so that when the 3-year when they call me, I still got to be able to afford that in addition. Yeah.
And people do that.
They
get
screw
cars,
themselves.
They get this, that, and the other. They rack up debt.
Yeah.
They, I tried to do a project in Vegas. I'm like, what's that mortgage?
That's a common thing.
You like a mortgage now.
I got a mortgage in Vegas in the meantime.
I'm like, that's extremely problemsome.
Yeah.
Yeah.
Hey, is handle that Torio? Is that Torio? I think that's Torio. Derek, did you replace your broken TV? Oh, yeah. Thanks, Derek. New areas to search in. Let me ask you, I have a question for you. I get it that these condos have these insurance issues, and some of it's like Hawaii specific, or not really Hawaii specific, but like the Hawaii requires ordinance ABC or whatever. But are single family homes also going to have huge increases in insurance soon?
There's no reason that they would.
Well, if a fire rips through a town,
I
get it. One building is 101 pop, right? If it burns down. But as we saw in Lahaina, and no disrespect, all our love to Lahaina, but if a fire rips through a town, that could be 100 houses, and they're more expensive per unit. So
yeah, they all have their own individual insurance policy. The risk is just it's spread.
But
one neighborhood isn't, for the most part, all insured by the same insurance carrier.
Yeah.
And on top of that, if an insurance company looks at their ROI and whatnot, they're not seeing losses in that category.
Yeah.
And they're making a lot of their decisions right now, not on.
Well, Lahaina was a lot of single family. It wasn't just. There's a good amount of single family that burned.
Yeah.
But why is that then a justification for insurance industry to screw us now?
Yeah, that's true. I mean, that is the reason why insurance is becoming more expensive, because entire companies are now making company decisions to not lend in Hawaii. It's like as a broker, and we work with the wholesale lenders, and then the wholesale, like let's say we have like our top 5 wholesale lenders, and one of them decides, like, we get some sort of random email and they're like, effective in 60 days, we will no longer be lending in Hawaii. We're not going to be doing wholesale.
Yeah.
It's like, why?
Yeah.
You get so much business, right? But I guess in the grand scheme of things, and it comes down to, again, per unit and just our size.
Yeah.
We're just smaller.
It's frustrating. So on single family, there's no reason that it should happen, though. That's the short of it.
Yeah.
Okay. Guys, stack us up with some questions. I'm going to address Corey's question, and then I'm going to ask Jodie another question. If you guys got nothing else for us, we're going to start heading out. Corey, amount. Where's the top one? Oh, moving to Hawaii this summer. I'm torn. Let me turn my brightness up. Moving to Hawaii this summer. I'm torn on purchasing a home or living on base. Corey, did I text you this morning? Are you 916, Corey? Yeah, I text you, man. Okay, cool. Well, shoot, text me back, bro. Moving to Hawaii this summer. I'm torn on purchasing a home or living on base. We would prefer to use our VA with zero down. My concern would be that although our BH could be closer to covering the loan. Yeah, of course you can choose to buy a place that is within your BH. That's within your control, right?
Right.
But wife is an 04. My concern is, so she gets 04 with BH. My concern is that when we leave the island, a house that costs $650,000 with a 7% rate won't be able to compete in the rental market due to folks who have 3% loans and can afford to rent low. We would be forced to sell to not go in the whole monthly. Not sure if 3 years of growth is worth the pain. What do you think? So, Corey, text back. I'll connect you with Aiden. He's created the spreadsheet for this exact projection. But what I can tell you is whether you're buying at 650, at 6.5 million, at 1.65, if you buy with zero down in Hawaii, especially at 7%. Now we're going to ask about rates next, but especially at a 7%, or you're not going to be able to cash flow when you leave. You're not going to build enough equity to refi down, or you're not going to pay enough principal down to then refi and be able to cash flow. That thing is not going to rent for your mortgage payment. It just isn't. And, we're going to always be real about that. The question you have to ask yourself is, what are the chances that when I exit, I will be able to exit for a profit after the 3 years? What are the chances that we'll extend and we'll do 4 years here? And if I had to stay in the investment at a negative cash flow, what does that math look like? So let's say you're negative $1,000 a month. That's $12,000 a year. Well, what are you doing in principal pay down and at a 4% projected appreciation? Now we can run it at 3, 4, 5, 6. We've had years 20% recently, and we've had years that are flat. But we can run assumptions that you bought at 650. What if it does 3% per year on average for the next 5 after you leave? So it'd be an 8-year total hold. What if it does 4? What if it does 5? What if it does 6? Now, at some point, it makes sense to have a negative cash flowing asset investment that appreciates at a crazy rate. So let's say I had a house and it was negative 10 grand a month. Never happened, right? Oh, it'd be a pretty bad decision.
Yeah.
But let's say that thing's appreciating at 50 grand a month.
Right.
Yeah, Robert Kiyosaki, Rich Dad Poor Dad, he said they'll never have negative cash flow. But geez, like if that's happening for some weird reason, I'm in it all day. Let me know I can buy 2. Now that's an outrageous example of what I'm trying to say.
Yeah.
But if you assume a 4% appreciation or run it at 5, look at what that means over time and how you build wealth and equity over the years after you exit. Can you handle the negative cash flow? You're like, yeah, Derek, I see the math makes sense, but we can't handle negative $1,000 a month. After this, we're going back to Washington, D.C., and my wife's from there, so we definitely need to buy there. So there is no holding for us. Or my wife's getting out of the Navy, and she's going to grad school, so our income's going to drop for a few years. These are all things to consider. But just because something, cash flows negatively, for example, my home I live in, I'm considering moving out of it. We'll probably go negative a few $100 a month, even at a great interest rate. We might get close to a break even, but I'm not getting rid of it because the appreciation play makes too much sense. Right. And I myself do not need to live off of cash flow anytime soon. And so what I've realized through this Ko'olina investment is I've experienced $200,000 in appreciation in 2 years. I had some times where I cash flowed. It made no difference to me. My life doesn't change whether I cash flow a little positive, a little negative. Like I am in my working years. And so appreciation plays. I was so enamored and infatuated with cash flow. Appreciation plays are what I'm after. I switch to cash flow when I need cash flow. And so it just depends. But you aren't going to be break even, unfortunately, Corey. We can tell you that. And we're not going to try and spin it any other way for you. But what we can do is run the appreciation and principal pay down, the equity, projections, and see if that's something that makes sense for you guys.
And project potential rent in 36 months and do that math.
And refinancing
and do that math and see if it can make sense or not.
So rent will probably go up a bit, and then your interest rate can probably improve a bit in the 3 years you're here. So that's a good segue to what are rates today? Because they're not the best.
Yeah.
And in the next 36 months, I assume they're going to get better. But
well, they're better than they were last week.
Okay.
So today we're at about a 6.25 for VA.
Okay.
At 0 points.
0 points. Okay.
For anything above $1,049,000.
Is that the jumbo limit?
Yeah.
Right now?
Sorry, 1.149.
1.149.
Anything above 1,149,000 is going to be more like a 6.625 at 0 points. VA.
Okay.
And then conventional, we're hovering around a 7%.
Okay.
So 6.25 is the VA that we've been seeing a lot because we are heavy VA.
Yeah.
And that is, we would probably do some sort of comparison, a long-term comparison around like, what does a 4 look like? What does a 4.5 look like?
Yeah. Yeah. If I'm buying right now, I want to see what like 4 to 5 looks like.
Yeah.
Because I assume that's going to be, say I have a 10-year hold. I'm assuming. Now I run it at today's rates are 9%. I'm going to run it at that and underwrite there as well. But I'm assuming that the majority of my hold is going to be somewhere between 4 and 5%. I think historically, especially post 1980s and 90s, like, and what were rates leading up to, like in 2003 to 7? What were rates?
Like 6, 7.
6, 7. And then 2008,
I can't
9
really
happens.
speak for 3, but I can speak for 5.
It was like 6, 7, yeah.
Yeah.
And then post 2009, when did from 12 to 20, rates were pretty stable at like 4 to 4.5 for a long time. So depending on inflation and contraction, there's a lot of tensions in the Pacific right now. Anything could happen, but I know I have the staying power to stay in something, If If I go negative $500 a month, I can handle that for a few years.
Right.
Your wife's in 04. If you work as well, Corey, you can probably handle that for a little while. What does the appreciation play look like for you? Because I can tell you too, even in Virginia right now, 0 down on a nice home that you're probably going to want at today's rate, you're probably not cash flowing either. You're probably not cash flowing anywhere buying things that you want. So should you not buy regardless of where you get stationed? Now, it could be that Virginia is not as bad as here in terms of the cash flow scenario, but should you not buy no matter where you get stationed? I know that if you do a military career and you try to buy as often as possible when you PCS and you get in the habit of holding when you can, you're going to retire with a lot more wealth.
Yeah.
These are general principles, right? All right. James, I'm looking at 2509 Alawai Boulevard, 105 and 295 Kapili. I love the HOA fee is low, including electricity, etc. What red flags should I look for? Older condo buildings. Reserves.
Insurance.
Assessments, insurance.
Reserve study, understanding like what are the big projects that are going to come up in the next 2 to 10 years, and realizing that that's going to have an immediate impact to HOA dues.
One we saw with your cousin's property, sewer line had to get, so when you have a ton of concrete that has to get trenched and a new sewer line, that can be very expensive. Fire sprinklers, reserve study. Hope you're getting a loan, because then you have underwriting and lenders to look at it. James, I'm not sure if we're connected, but yeah, reach out to us. On the market 70 days. So that's a little concerning. Thanks again for the live streams. Yeah, for sure. 259 Kapili. Okay. Josue Guerrena. What's up, Josue? Throwing some aloha. Yeah, thanks for reaching. Mahalo to Jodie and her team for locking us at a lower rate before all this craziness. Right on. Yeah. Kimberly, did I miss Kimberly? How far in advance should I contact you guys if I'm looking to buy an investment property with 20% down? I assume these properties are harder to come by now. So depending on timing and what it is and the person's picture, it might be 25, right?
Right.
It could be 25. And in terms of timing, sooner the better. I don't know. It depends on when you want to execute. If there's no way you execute until 2029, then we don't have to connect now. But if you were like, hey, I'm sitting on all this cash, I'm well qualified. If the right thing came up, let me know.
Yep.
Like, for example, Josh reached out to us and he's like, hey, this is the thing I'm looking to do. I just met a guy in Mililani-Mauka. Well, I met him bowling and he lives in Mililani-Mauka. And he's like, yeah, I might be selling, I might be renting, I'm not sure. I have a VA assumable. Like, the stars are aligning and I might be connecting these two people to do a deal just because we talked.
Right.
So
that's an important thing. That's what I was telling our...
Look at Marissa and Trey.
Our buyer is like, you need a skilled agent to know what you're looking for, because chances are they're going to know about it before you.
Yeah.
It's not a matter of just, oh, well, I went to XYZ website and I saw this, right? Usually if you saw it, it could be too late. I mean, there's a lot that you can manifest because you have an agent that knows what you want, and he's also connecting and talking to people that know what they want and know what they're trying to accomplish, and that makes a huge difference.
And so Jodie's a little more into the manifesting than I am, but these 3 clients that we're closing one, then closing another, then closing another, and they all need each other.
Yeah.
With the exception of the first, I guess, doesn't need the second 2, but the second 2 need the first and consecutively. So when they were like, it's going to happen, Derek, I was like, it's happening. Like
and it was a hard find.
Yeah. It's a hard find.
It was 2 hard finds.
Yeah.
But it was like, if you never express and you don't have that skilled team that's working and looking for it, then it will never happen.
Yeah.
So that's what I was talking to my buyer about, which was get connected, right? So that you can at least tell Derek what you're looking for, and then you can be poised. I'm not concerned about their qualifications to make it happen.
Yeah. Yeah. So depending on when you want to execute, reach out to us today, but certainly months before you want to execute. Aloha, is it possible for core team to do a video about how each of you got started in real estate? I think it'd be awesome to hear your stories. Thanks, Nereda.
That'd be a great idea. I love that idea.
It's so self-indulgent, but if the people want it, I mean, yeah. So my long story short is I built a Brazilian Jiu-Jitsu brand. We made like the shirts, the hats, kimonos, all this stuff. It was a pretty big thing. I sold it to focus on my healthcare career. And then a few things led me to come to Hawaii, come back home, and get out of healthcare. And then in that time when I sold my business, not for a lot. It was a lot to me at the time. It was $25,000 after taxes. It was less. But I was like, I'm going to parlay this and turn it into more money through real estate investing. So I started studying obsessively. And then long story short, years later, I get my license. Then COVID happens. I get super serious. And we have one of the most successful businesses on the island for real estate. So that's me in a nutshell. Mahe, similar. Like,
what was Mahe doing before? Can't remember.
Mahe worked at a resort.
Oh.
But she kind of reached like a rock bottom point in her life and was, everyone's like, why don't you do real estate? You'd be great. She started with a brokerage, spinning her wheels, nothing really happened. And then when we connected, just the rest is history. Like, look at our team, look at our channel. And so she is buying a new truck and, positioned to buy a house and works extremely hard, deserves it, works for it. So that's Mahe. Could talk about Aiden, talk about Kenny. Could talk about Jodie's story of how she got into this. We've told it before, but we have a podcast about it. But yeah, maybe we'll line that up for one of the future lives. We'll do like a round robin and share our experiences.
Yeah, that sounds like a fun one.
Yeah. You have a good one. Yours is probably my favorite.
Yeah. I like mine.
Got it. I'll be in touch. Any differences between getting approved by a local credit union as a lender on the mainland versus the mainland? So credit unions, there's credit unions and banks, which are kind of the same thing, and you're going directly to them. And then there's a broker like Jodie. So the reason why I like a broker, and even when I was looking on the mainland in Vegas, this kind of older, decrepit agent was mad because I wouldn't use her lender. And I was like, your lender's a bank.
Yeah.
I don't like the idea of someone that only has one option for me. I want a broker in Vegas. And she didn't like it. She's like, my clients will use who I tell them. And I'm like, we might not be a fit for each other. And we didn't end up doing business together. So that'll tell you how that went. She also was upset that I either wasn't going to use her home inspector or I was going to pay for a different home inspector and then hers could come behind. She's like, you got to use my lender and my inspector. And I was like, that's a very vulnerable way to do business. And if you can't see that, I don't know that we're not the same wavelength there.
Yeah.
But I like a real estate broker. And I think every agent will say this everywhere, but a local mortgage broker, a local mortgage broker is better for several reasons. Local reputation, local team, local time zone,
Local knowledge,
especially with these condos and all this stuff. And then getting the job done efficiently with a great rate and great people. There's really no reason not to. And so I made a statement one time. At one point, especially when the market was crazy, listing agents were very scrutinizing of offers because they had 20 of them. And so they'd be like, what's your down payment? What are your terms? Who's your lender? And at one point I did like a sampling, and about 20% of the time they were like, oh, you're using Jodie, 20, 25, something, a not insignificant amount. They proactively, unprompted, said, oh, you're using Jodie. Okay, good. That's either a contributing factor or sometimes like the reason why we accepted you guys. So the difference is I really don't like working with mainland lenders. Occasionally we've done it and it's been okay, but they, like Wells Fargo, for example, they don't have the paperwork that satisfies the conditional loan improvement contingency and the Hawaii purchase contract. Mm-hmm. And so if I'm on the listing side and someone has Wells Fargo, I know I can always cancel on them.
Right.
Because they literally don't coincide with Hawaii's paperwork.
Right.
and it's just so frustrating. I hate working with them.
And their collateral department is just so behind. Like they just don't. They're not knowledgeable.
The guy lied to me too. That's the thing. He like lied to me. He's like, Derek, I know you don't know who I am, but I actually do more loans than anyone in Hawaii.
Yeah,
We do 300 million and all this stuff. And I was like, it wasn't true. And basically, they're salespeople that are detached from the process, and then the process isn't good. That's okay. Like if you end up working with Mahi because Derek's doing other things and Mahi's great and our assistants are great and everything's great, fine. If you talk to Jodie at the beginning, a couple of times in the middle, and then at the end, but you have this whole team working for you, outstanding. When you have this like salesperson lying and then a process that's not good.
Right, and service levels drop noticeably.
I don't enjoy it.
Yeah.
David and Nan, remember them?
Yeah.
They were like, but they said, Derek, and I'm challenging Jodie and her brother. I'm like, okay, I'm getting this from over here. I'm getting this from you. Like, tell me in detail. Let me understand this fully. And I like it because I learned. We got going on the loan with the mainland lender, and then they go, oh, so the association has that? Like, I'm not familiar with that. So they had to back out with that lender, come back over to Pacific Rim and get the job done. There's really no reason. If Pacific Rim is going to give you the same or better interest rate, there's no reason to work with a mainland person. It's just nothing. It's more liability for everyone involved.
It really is.
There's no reason to. No reason to. So that's my answer to that. I
got to get that, Kenji, that piece.
Clip it.
Please.
Clip it. Yeah, there's no reason to. All right, guys, we're going to wrap this one up. Any last words on the market? Or you guys got to be busy because we're busy.
Yeah. I mean, it's definitely picked up. I have a lot of people calling me that are like, hey, I talked to you 5 months ago. I talked to you 3 months ago.
Yeah.
And we're redoing all of their quals because that's what you need to do.
How long is a pre-approval good for?
The way I like to answer that question is as good for as long as no major financial changes have been made. So if you have not incurred any new debt and paid off any debt and you make the exact same amount, most likely we're going to, subject to the rates, your quals are going to be in the same ballpark.
But how long
But in reality,
the credit pool? When would you have to pull credit again?
120 days.
120 days. 4 months.
And so we have been much more strategic in paying attention to that. And a lot of people ask me when, like, based on I'm coming in, July, should we do it now? Because I want to prevent the need for another pull. And I get preventing the need for another pull, but at the end of the day, there's a level of certainty that is required in order for us to be able to give you a green light.
But the pool does. So when I was buying both times, I got pooled multiple times in a short period. The pool didn't really affect my credit score by 5 points, or it was like nothing. No, so unless someone's on the border,
right,
then they shouldn't really matter.
Right. Yeah. If you're not on the border, then it doesn't matter. And if you're 700 plus, it's going to be minimal impact. And whatever you lose, 2 points, 5 points, that'll be replenished in the next credit cycle, 30 days. But it's just something that was ingrained into people. I feel like it's like an innate thing that everyone's born with because,
our parents, right?
Yeah, it's just there. And it's so much more minimal than most people have any capacity of understanding. When I explain it to them, they're like, oh, do it then. So it's really important because there's a lot of...
You should record these things. I mean, I have a lot of things that I need to record and just have links so that... Because then they have the time and the space to digest it too. I feel like people... some people appreciate being told on live or with a little distance. Like if you're not talking at them,
right,
they might be like, oh, okay, cool. We watched a link that only has 20 views. Like it's a private link. Okay. All right.
Yeah.
I trust it more.
Yeah.
Yeah.
But the main reason is that there's a huge amount of strategic information that we can share when we do see your credit report and your credit score and your debt to income ratio and your goals.
Yeah.
And we're able to say like, okay, between now and July, like this is the goal so that you can be where you want to be.
That's true. If you could get a doctor checkup every 90 days for free, like why wouldn't you? Get a little screening, a little MRI, a little blood test, like why wouldn't you? If you could speak with a financial professional, a CFP, I'm not going to conflate things. You can speak with someone skilled at finances in advance and have an opportunity to work on credit or to budget right or to know that you need to refi your other home to a conventional out of VA to get your VA entitlement freed up, or you need to like do like this double closing HELOC creative thing that takes a lot of time, and instead of being 30, 60 days in advance, you need to be like 180 days on this strategy.
Like our buyer that we just got into escrow.
Who is that? Who's doing?
Should I say the name?
No, don't do it. Yeah.
But you know, we talked with him like 6 months ago, 7 months ago, maybe more. And we talked about getting a HELOC.
Yeah.
We talked about all the strategic things that we wanted him to do, and he did it. And now fast forward to now, and he's in escrow.
Yeah. So why not? Yeah. Why not do it way in advance?
If he wouldn't be in escrow for this property if he didn't already get that HELOC.
That's true. Yeah.
So that wouldn't have happened.
Yeah.
It's strategic in nature, and there's a lot of information that we can share.
Agreed. I have an investment property at one of the high rises at Ward Village. It's cash flow negative $500 for a few years, and I haven't seen much appreciation. Yeah. What do you think of holding this long term? I would want to know what building. Are you in 801 South? Are you in IO? Like what is it that you're in?
Yeah.
What floor are you on? How many parkings? What's your view? Why is it like? What are other things selling at? If you know, like I have a condo coming up soon. It's second floor, Mauka side, I believe. I haven't seen it yet. Second floor, I believe Mauka side. Wouldn't matter because it's second floor, but they have 2 parking, and most of those units have 1 parking, and so it's like, that could be a competitive advantage in the Kaka'ako area. Now you said Ward, so like what building are you in? Hit me up, and I will not knock on your door and try and pressure you and sell you. In fact, it'll probably take me a couple of days to get the analysis together right now. Tuesdays are a busy day, and then we have a couple of other sellers that came in. But Sean, I'd be happy to go over it with you.
Yeah.
In fact, you run a greater risk of some other agent watching this and trying to Google you and bother you, to be quite honest. So yeah, hit us up, and I'll be happy to discuss it. And like also, when did you leave the island, or are you still on the island? Is HARPTA an issue? Are you going to be leaving the island and then HARPTA will be an issue? That's a withholding, 7.25%. So these are all things to consider. It just depends. Negative $500 a month, $6,000 a year. It's not that bad. I have a feeling appreciation will outrun it. Yeah. What's the insurance situation? Why isn't it appreciating? I kind of need to dig a lot more. And should we use a Hawaii lender or mainland? Yeah, Hawaii for sure. I used to live in the islands and use Jodie. I used to live in the islands and invest in the Heartland Midwest area. So you probably had maybe you had Turnkey, or you had other burrs in Akron or Indiana or something. My mom owns several homes and all are free and clear. What amount of equity could we pull from each property? Oh, so they want to pull lines of credit. So it's not HELOC if it's not your primary. They're talking about leveraging. Well, it depends, because if it's like a bunch of little ones in Indiana, they could find like a local bank there. Okay, so I read the second part too soon. For that, it depends. You might use some like Midwest credit union for this, but they could find some Bank of Nebraska to do like a portfolio thing and leverage the portfolio of 10 properties and pull out. It's going to vary depending where you go, right?
If you guys have a banker, just because you own so many properties, then that bank can probably put together a special program.
Yeah.
Using cross collateralization.
Ooh, cross collateralization.
Yes. Other than that, definitely a local credit union.
Yeah, that's a unique one. I'd be interested in what you acquired, The homes are on Kauai and Oahu. Oh, well then hit us up. We'll connect you with Jodie. Hit up Pacific Rim Mortgage. So you're Sean Romero from the thing, or just go to our website right here. Go to coreteamhawaii.com. Go to the very bottom, fill it out, and let us know that you were on the live and you want to be connected with Derek Okahashi and Jodie Tonga, because there is a Derek Tonga. And yeah, let us know. If it's on Kauai and Oahu, you left in 1998. Yeah, I don't know. This might be a bit of a complex one, but you left in 98. So if you left in 98 and you're looking to exit, wait, am I conflating two people?
Maybe. Yes, you are.
Crazy. No.
Yeah.
Sean. No, Sean's the one asking about the multiple. Oh, I used to live in the islands and invest in the Midwest area. Oh. My mom. So the mom owns properties, but not in the Midwest. He used to invest in the Midwest. I see. So if the homes are on Kauai and Oahu, you're probably gonna.
Yeah, we can help you.
Yeah, you can help. You can help with that. Cool. All right, guys. We'll see you on the next one. And thank you guys for all the questions, especially these like high level, nuanced ones here at the end. We appreciate that.